in terms of calculation of taxable income, it will be based on the accounting net profit reported in financial statements, adjusted for any exceptions as specified in the law. And there's certain free zone businesses that could be called as qualifying free zone businesses that adhere to the regulatory requirements that basically are subject to the 0% tax rate. So there are some exceptions for free zones, but they're quite nuanced, they're very specific. So for the most part, they're almost negligible. And there's some transfer pricing and documentation that is addressed in the law, such as companies must comply with transfer pricing regulations and maintain relevant documentation in line with the OECD guidelines. Mm-hmm. There is some more specific and kind of technical terms like loss utilization, so the law kind of provides for that. But there's one interesting thing is that there's no withholding of taxes. There's no withholding tax on like dividends, interest, and royalties paid to non-residents, which is an interesting nuance. And in terms of the compliance requirements, businesses must register for corporate tax, and all businesses must register for corporate tax, and all businesses must file annual tax return, but only certain businesses that qualify actually have to pay the tax, and that's all done through the Federal Tax Authority or the FTA. So this is these are the main aspects which create this sort of very comprehensive framework.